As I warned you a couple of weeks ago, as we came closer and closer to this April 9th date, which is now being pushed back to August 1st, I told you in June we're going to get more tariff news coming down the pike as we get closer and closer to this date. Trump administration waited until the markets closed, 3rd, 4th of July, 4th Independence Day holiday, before announcing the tariff letters are going out. Finding out what some of those rates are for some of those countries. Again, if you last video, I told you this is a pressure tactic to these countries a reality check that either they're going to be paying whatever tariff the United States decides, or they're going to try to negotiate a deal. Again, this is motivation. Again, it's probably going to be associated with a sell-off and a pullback to digest the gains. We've had a massive rally since I called the day of the bottom, predicted the rally to new highs. We're likely going to see a pullback. Resume the advance. Did you hear what I just said? Great Scott! I just said, and resume the advance. Yeah, I still think we're going higher. Talked about the scenarios over the weekend, but if you listen to the interview with Treasury Secretary Scott Bessent over the weekend, he said exactly what I said. Again, the United States is letting them know, wake these countries up, and get motivated to strike a deal, because if not, this is what's going to happen. So we saw futures announced this after the markets closed. We saw the futures drop on this news. Talked about that over the weekend, and then today we saw the market drop and then recover off of the lows. We've got tariff letters going out today, and this week reported that Japan and South Korea, they're getting 25%. Every country is different. Some of the tariffs are 40%. This is likely going to be a catalyst or part of the catalyst. We did see the 10-year Treasury yield jump on this issue. Oh, tariffs, concerns about what? Inflation. We just had a beautiful bill signed. It also concerns about government debt levels. So we're seeing the yields jump up and broke out last week, as I talked about. The 10-year yield jumped up over 1% today, now back above the 50. We had gotten above the 200. Remember, I talked about this last week, and I told you the bullish falling wedge could give us a bullish MACD cross, and we could begin to see this begin to spike. Well, concerns about the tariffs, now concerns about government debt, so we're seeing a surge here. The 50 is still above the 200 here. Go back a little bit with the yields. Trump comes out again. They're supposed to announce, the rumor is, I don't know if it's true, but the rumor is they're supposed to announce a trade deal today. I don't know if that has been announced yet. I don't know if that's just a rumor. Seen anything about it yet. I'm making a video right now, so it could have been announced while I'm making the video. We go, oh, we got a trade deal, and we get a rally, or the case may be. If yields do pull back a little bit with this breakout, we could see the S&P attempt to fill the gap, today's gap, or even try to make a new high before getting a bigger pullback. There's a negative correlation right now between the S&P and the 10-year yield. So again, the yields start moving higher, market will likely move lower, which is what I think is likely going to be the case. That's why I said a couple weeks ago, all Trump has to do is come out and go, tariff! The herd's going to run around with their hair on fire. Remember, I told you 3 months ago when I called the bottom on April 7th, we could see a rally over the next 3 months, have things start turning down again, start getting volatility, more uncertainty about the tariffs. We've been warned about all of this because June, the Trump administration came out and said that the tariff rates were going to be announced in the next few weeks, and we talked about that back in June. I told you I was watching for the oscillator to turn red to complete the divergence, and we're getting that on the NASDAQ. Now, the S&P is not getting it. The MACD is diverging as well here. We have the multiple point divergence that I've been talking about. And again, I do expect that we're going to get a reversal, that we're going to get this bigger pullback. But sometimes, not always, you get a divergence between the NASDAQ and the S&P at a bottom or a top. It doesn't always play out that way. It doesn't always happen. But many times it does. We're still on our positive seasonality for July. I talked about that over the weekend. So it's still possible we go a little bit higher. Again, we got these 9 counts, and I'll show you what's going on with that. But sometimes you get a 9 count and you go a little bit higher. Sometimes you turn immediately. On the NASDAQ, we're getting the red bar. Again, these divergences could be completing with Thursday's high. I've talked about that possibility. I'll show you another possibility where maybe we get one more push higher possible. We're not getting a bearish reversal of conditions. We still have blue bars, a green cloud. So again, if this is to play out immediately, we got to drop below the 10-period moving average, the red line, drop below the lower boundary of the cloud. That would take out the 20-period, by the way, and get a bearish reversal of conditions. That would flip momentum. We got it over here, but it didn't last. Remember I told you I was wrong about moving to new highs, that we could get that lower high scenario. Predicting a lower high scenario, I was telling you if I was wrong, that could be the case. I think these divergences are going to play out and produce bigger sell-off for a pullback, likely to test our 200-period moving averages. That's a green line right here. It's a black line. The black line is the 200. The green line is the 50. The NASDAQ daily chart. Dow was down just under 1%. It did not get the red bar today. The stochastic rolling over, and again, you could get it. The way NASDAQ was down about 1% at the lows, over 1% at the lows, and it rebounded. We ended up closing down 0.79%. Back to the NASDAQ chart real fast. Now, we didn't get the red bar on the Dow. We did get it here on the NASDAQ 100. We didn't get it on the Russell. The Russell was down just over 1.5%, 1.55%. So again, I expect we're going to get these red bars, but sometimes you get the red bars and you still try to go back up and make a new high or test the highs. We're forming a triple divergence here on the Russell. You could see this. India's got the divergence. We got another red bar today, but look what happened here. You got a red bar. You still ended up pushing back up to a new high on NVIDIA. And NVIDIA has that trend line I've been talking about. If we reach that, the stock market still may try to get one more push higher. NVIDIA down 0.69% today, not down dramatically. The S&P 500, we did not get the red awesome oscillator bar. We still may get it, but sometimes you get the red bar, and you, like we just saw with NVIDIA, and you still end up going higher. We got the 9 count today on the S&P 500. Sometimes you get those 9 counts, and you go just a little bit higher. Watch the video all the way through. You'll see you still may push a little bit higher. Looking for clues. At the top is going to be maybe that was last Thursday. I think the jury is still out. Again, could we get a red bar on the awesome oscillator? Join the NASDAQ either tomorrow or the day after. And again, still end up trying to bounce. But we have these triple divergences on the MACD, on the awesome oscillator, and I do think they're going to play out, and we're going to get a corrective move, but then I think we're going to move higher. Bitcoin's already peaked on May 22nd. It's been correcting. It's trying to rebound, turning off the resistance zone. You can see my latest Bitcoin video at the end of this one. But I think the stock market will play catch up to Bitcoin and get that larger correction. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel today. I just put it all out there, but it takes a lot of time and effort to do this. I show you the things that I'm looking at to make my decisions about the market. Again, absolutely nailed the bottom, nailed the rally back up. It's going to come to a conclusion. We'll get a bigger pullback and then go even higher, but absolutely incredible calls. If you like videos, you like the charts, you like the indicators, please let me know that by supporting the channel. Just follow the link below to take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. Just ask that you do that rather than trying to sell you a bunch of junk you don't need. Send you to gold sites that want to charge you, double and triple commissions. There's so many shady deals on the internet. I just don't want to do it. But I do need to hear from you in order to make it work. So if you have found these indicators helpful, as I have, then please take a moment to support the channel today. I thank you for that. I warned you. I had a 13.9 coming up for today. I warned you that the previous week, we had gotten a 9 count on the weekly chart. And I warned you back in June that we were setting up this 13.9, which we now have another one. It was 13.9 that marked the December top. But I warned you that if this completed as a reversal with a lower high, then I would be wrong about going and making new highs. As I've told you over and over again that I was predicting new highs. Actually, that did happen, but I told you if we got a lower high here and we turned back down, then I would be wrong. We wouldn't complete the 9 count on the S&P in the weekly time frame, and this count would override it. But if we completed the 9 count on the S&P, we would get a trend extension. This count here would be nothing more than a pullback like the 9 count over here. We're getting a 13.9. This is telling us that we're either going to get a pullback like we had the last time around, or we're going to get a reversal that's going to give us a bigger pullback. I think we're going to see that happen. Now, because we got a 9 count, that doesn't mean, oh, today's the top, that's it. That doesn't work that way. It doesn't work that way. Talked about your phone not being charged up, and sometimes you've got a little bit of life left into it, and it goes just a little bit higher. We did over here. We got the 9 count when we had just a little tiny bit higher, and then we began to turn. Other times, you turn immediately, like we did at the 2023 bottom. That marked the day of the bottom, the 9 count there. Other times, the 9 count like right here, and you end up going a little lower, and then you get pullback or reversal. You got the 9 count today. The question now is, does that mark bar 8 as the top with our 13 count? We have a double sequence count reversal signal, or do we go a little higher? And again, we even went a little bit higher right here before we got that pullback. Do we see the same thing here? Sometimes the 9 count does mark the immediate turn, as I just showed you at the 2023 bottom. The same with the top. Times you go a little bit further, and then you begin to turn back. And I'll show you 60-minute chart and show you why we still may get one more push higher to get a triple divergence on the RSI in the 60-minute time frame. Keep in mind that just over a week ago, we completed that 9 count, and I told you we might go a little higher, slam up into the trend line. Well, we ended up doing that, but we overthrew the trend line, just like the NASDAQ did from the previous highs. It was telling us prices getting tired. It was a 9 count that marked the bottom. Bar 8 was the low of the count. This is telling us, hey, price is getting tired. Now, maybe we turn immediately with the 9 count in the daily, go just a little bit higher. Again, the 9 count here in the weekly time frame and the 9 count 13.9 that we completed today in the daily time frame is telling us, hey, price is getting very tired. A massive run. I called the bottom at key support levels. Overdue for a pullback. I think you're going to end up trying to come back to gap support or trying to fill the gap here, as I've talked about, on if we get a wave 4 or a wave 2. Again, I've talked about the different Elliot wave counts over the weekend. I'll show you them in this video briefly. Weekly chart here of the S&P. I've marked it daily here. That is the weekly chart right there. Watching to see, does that 9 count in the daily time frame play out immediately, overthrow it just a little tiny bit, and then begin to turn? Now, the same is true for the NASDAQ. We got the 9 count today. We completed that. I told you to be watching for it. We got it. We're above the bar from 4 bars ago. But now, does this mark bar 8 from our peak last week? The abbreviated session on Thursday, does that mark it as a peak? Overthrow this level just a little bit higher. Now, remember, sometimes the NASDAQ and the S&P diverge from one another. NVIDIA still might hit that trend line I've talked about, which might allow both of them to make new highs if they do try to make new highs. They may not. They have peaked with the bar 8. We need to see evidence now. Maybe you're one up on me and you know the future. I don't. As support and resistance levels, I'm expecting a top. I said the divergences may not be quite done yet. Daily chart and on the hourly chart, as I talked about over the weekend. I'll show you them. The 9 count here. We now have a 9-13-9 reversal pattern, and we may overthrow this level a little bit. May diverge with the S&P and get a lower high. Both the S&P and NASDAQ may have peaked on Thursday, but we need to see evidence if that is the case. These counts are warning we're likely going to see a reversal. A 9-13 is a reversal pattern. This 9 gave us a pullback. This 13 gave us a pullback. This count right here is likely going to give us a larger pullback for a reversal. Back towards these 200 period moving averages, or maybe beyond them, get the wave 2 scenario. At the 13.9 today with the semiconductors. Semiconductor ETF SMH. It was a 9 count that marked the bottom in April with the semiconductors. And either this is going to mark a turning point or we're going to go just a little bit higher. NVIDIA has a possible 13 count if it tries to reach that trend line I've talked about. I don't know that the 13 count will complete on NVIDIA, but if it does try to go a little higher, We do have that trend line directly overhead and a possible 13 count. We did get a 9-9 here. Again, notice the 9 count marked the bottom along with the semiconductors ETF here with NVIDIA. And I think the time is short, and you're either going to get a turn immediately or you're going to go just a little tiny bit higher and then begin to turn. We do have positive seasonality right now. I talked about this over the weekend, that right now we're in this favorable season for July. But remember that we do have, the last couple of years, the peaks forming in July. We had one towards the end of July and one at the middle of the July the last couple of years. Possible we get it here at the beginning of July, but it could drag out. We don't see those triple negative divergences complete immediately. I think they're going to complete, may buy just a little bit more time and try to slightly higher. So again, we'll be watching to see what happens. Just don't forget that we do have that favorable seasonality. Now, the favorable seasonality, again, it doesn't always play out. It's wrong in March. We kept going down to new lows until April. Not always right to look back in history and see times where it's been completely wrong. So seasonality is a guideline, but it's not an exact science. I want to show you the trend line I'm looking at on NVIDIA. I'm watching this closely. We still may reach it. And if we do, the S&P and NASDAQ still may try to move to a slightly higher level above the 9 counts that we got today. You still have this bearish divergence. Maybe it's not done yet. Maybe we still push one more leg higher. NVIDIA's up 86.76%. Talked about the bottom down here at the April bottom. We talked about that. Market and with NVIDIA. Still risk of a larger broadening formation here if we come up here and that ends up being a top for NVIDIA. Alternative wave counts play out and makes a higher high and NVIDIA does not, which is what we saw back in July of 2024, back over here. NVIDIA made a lower high. NASDAQ made a higher high. We got a possible peak. This could just be a wave one, though, of a larger 5-leg push higher. And again, I've talked about my Elliot wave counts over the weekend. I'll show it to you briefly in this video. Trend line I'm watching. If we still reach this, the stock market still may try to inch just a little bit higher. I'll be watching this closely. I've excluded the shadow, by the way, over here, and I'm just connecting these points. Peak right here in January. I want to show you the 60-minute chart, but I want to show you that if we do end up overthrowing the 9 count here, it could be that bar 8 is the high of the count. But if we do end up overthrowing it and moving above bar 8, moving above the entire 9 count, which sometimes happens, I get another reference point of a divergence on the 60-minute chart. I told you over the weekend, it may not be done yet. We may get a divergence in this most recent price action. Still possible. We are down more than 1% on the S&P at the lows. We ended up closing 0.79% lower, down 49 points and some change lower. Now, again, this divergence may not be done. We had a peak and we had started to turn off of that high, abbreviated session on Thursday. I told you we might still see a divergence in this most recent price action. I told you I didn't know if these divergences were done. I said they might be, but we may not be done here. We may not be done with our triple negative divergences in the daily time frame either. The jury is still out on that. Here, look at the Elliott wave count. And again, Elliott wave is speculation. This is my wave count where we're saying, okay, the wave 1. But you can have the same thing with this being the wave 3 count. It can work with either of the counts. I'll show you both briefly in just a moment in the daily time frame. But it could be we had a 3-4 over here and this push higher is 5. Or it could be that we have a 1, 2, 3, 4, and now we get 5. And why do I say that? If you look at these other divergences, oftentimes, like right over here, we started to sell off. Look at this right here. We started to sell off, but then we pushed it slightly higher and got that one more reference point of a divergence. We had a divergence and it turned into a triple divergence. Did we see that here? We had the same thing before this pullback over here that we just put a line on it here so you can see it. We ended up seeing the RSI turn back up and we saw price jump just a little bit higher. Look at that before we got that pullback to the 50-period moving average. Did we see something like that? Where we push just a little bit higher, and then we begin to correct. Now, these were just pullbacks, smaller pullbacks. This is likely going to be a larger pullback or a reversal. But I think you got a possible triple divergence that could be in play here. Certainly don't want to rule that out. CD's got the diversions on here. It could form one here also in the recent price action. So is this 1, 2, 3, 4, or is this thing done and I'm totally off the wall with this triple divergence? Well, you'll have to decide for yourself. You'll have to decide for yourself whether you think that is possible. I think it's still a possibility that we form the divergence. I told you I was looking for a top. I'm looking to play these divergences, the triple divergences on the daily chart and the divergence here on the 60-minute chart. I'm still waiting patiently. I'm trying to be very disciplined. Still long. I am still looking to flip the trade. Be wrong. If we peaked on Thursday and we start to sell off, I could be wrong. Signals will start turning back to bearish, and I could just play that. One more pop up higher. I'm going to try to play this triple divergence right here. I told you over the weekend, again, I wasn't sure if the divergences were done with Thursday's high. I said they might be. I wasn't sure. I always try to tell you what I'm thinking. I told you I'm looking to play these divergences, but I told you they may not be done yet. They may not yet be complete. And so I think you still might buy some time. Now, if we start seeing my signals all begin to turn bearish, then again, I could just play my indicators as they start turning bearish. I don't even have a bearish reversal of conditions yet. I was just trying to play these divergences because I think they're going to lead to a shift in momentum and then my signals eventually turning bearish, picking up what I'm throwing down. So right now I am still long. Closed my long positions yet, and I haven't taken my short position yet. And I told you that the weekend. I told you that last week, that I'm still watching this closely, looking for this divergence to finish. And again, I told you we still might get one here in the more recent price action. That's why I'm waiting. But I am going to lock in gains on long positions and flip the trade. I'm going to do what Bitcoin did. And I'm already short on Bitcoin. Already locked in gains on Bitcoin. Flip the trade with Bitcoin. Bitcoin already peaked back in May. Actually, I think the stock market will follow Bitcoin. There was a delay back in January. It peaked in January. The market didn't peak till later in February. Bitcoin's the leader of the pack. The market will eventually follow Bitcoin down. Now, I think the same thing we have here on the S&P 60-minute chart is possible for the NASDAQ. They diverge, which sometimes they do. NVIDIA can go hit the trend line I've been talking about, then NASDAQ might go to a new high, and they both might these triple divergences with the 5-leg push higher here with our wave 5. Either complete wave 1 here or the wave 3. Let me show you the 60-minute chart real fast of NASDAQ. NASDAQ was down 0.79% today, and here is the NASDAQ again. Is this done, or is this a wave 4 and we end up getting one more push higher and getting a triple divergence? We do have these divergences already formed, but end up getting a triple divergence, and we very well could end up with the triple divergence at the February peak, at the December peak for the NASDAQ. Again, and over here with the counter chart, I still think that this is possible. I could be wrong. I have the guts to tell you what I think, and very few people do. Coming down to the cloud and the 50-period moving average, the 10-period moving averages and the daily time frame, if we bounce, we still might get one more push higher, throw the 9 counts, and begin a bigger sell-off. And it could be that we sell off into the August 1st tariff date where they go into effect. Maybe we get more deals announced by then. The Trump administration is doing this to try to pressure countries to get this done. They're dragging their feet. They either get these tariffs or they cut a deal. Sell off over the next few weeks. Just something I'm watching. And again, this is the count right here suggesting that we're completing or about to complete wave 1, a much, much bigger 5-leg push higher. Again, if my signals all start turning bearish for S&P and NASDAQ, then maybe the peak is in, and that's all she wrote. Might be a 3 here, a 4 here, and a 5 here. Again, Elliot wave is speculation. I'm telling you, we might get triple divergences. Wrong about that, then I can always just play momentum starting to turn. I'm right about that, then I could sell into the rally and try to flip the trade with the triple divergences. I think that has possibilities if we try to go back and fill today's gaps. You can see right here on the 5-minute chart, that is at 62.79 on the S&P 500. We sold off, we gapped down here, and it was a gap and go on the intraday charts. It was a gap and go. You always want to watch a gap. Is it a gap and go, a gap and fill, or a gap and trap? If we get a gap and trap, we come back up and fill this gap, and we go higher on those 60-minute charts, a larger time frame. We still had the gap and go on the shorter time frame, but we formed this divergence. Got a death cross here, though, so no guarantee that we go make new highs. But if we do, to go back and fill that gap in the next day or two, you still might go to a new high before getting the larger pullback. So don't rule that out. Coming back right now and filling the gap here at this time right here with today's gap lower. So we'll be watching this gap with great interest. CD is starting to turn positive at the very end of the session. If we can go positive and get back above the 200 in the cloud, then you got a shot at filling the gap. Diversions on the RSI, and it's going positive now. So if we can see the 200 cleared here in the 5-minute time frame, clear the cloud, then we'll be watching to see if we fill the gap. And if you fill the gap, if we get the gap and trap, you end up going higher. If we fill the gap, we get a lower high. Fill the gap, we could stall, even if we rally, could stall at gap resistance. It's not clear the cloud or the 50 period here on the 5-minute chart at all. So just some things I'm paying attention to. Could end up setting up a larger divergence if we fill that gap and go higher, a larger divergence not only on that 60-minute chart, but here on the 15-minute chart. We could see something like what we had over here before this kind of sideways correction came down, and then we came back up, but we only kind of corrected sideways after that. Here, it could produce a sell-off. No guarantee we fill the gap, but it's something I'm watching. I remain very open-minded. I want to be disciplined. I do think the jury is still out as to whether the peak there last Thursday. With our seasonality, our positive seasonality, maybe it buys us a few more days, a little bit more time. We close back below the upper Bollinger Band. So again, risk is that's it. Sometimes you close below the upper Bollinger Band and then you go back towards it again, tag it, or even try to overthrow it. We do have this extreme here. You form a little tiny divergence right here in this most recent price action. NASDAQ already did. So possible they diverge from one another. The question is, buy a little bit more time, or has a reversal started? And again, I don't have the answer to that. I'm telling you, again, the different scenarios. It could be we peaked here if we start seeing evidence of that. We're getting the 913 sell signals in the daily time frame. I think it's still possible we get a triple divergence on the RSI in the 60-minute time frame. If we start breaking down, again, below the 10 period here, we start seeing evidence of a reversal. That may be all she wrote, but I think it's still possible we overthrow those 9 counts. I think this triple divergence is going to play out on the MACD. But as I've said over the weekend, it may not be done yet. I talked about my 2 Elliott wave counts over the weekend. Here is the S&P. This count says that we are about to complete or have completed wave 1 in a 5-leg push higher, and we're about to get wave 2. This count would suggest we go much higher in the coming months ahead. We've just had a 30% rally on the S&P 500. Overdue for a pullback, a V-shaped recovery. Trump is likely going to rattle the markets again with the tariffs, and we'll probably see a corrective move. It started, or one more higher, and then it starts. But again, it is likely going to start. So this is the count. It says we're either finishing wave 1 or we have finished it, and we're about to get to wave 2 for an ABC correction. Count would suggest we go back and fill the gap here and move beyond the 200 period moving average, the black line. This is my alternative count that I talked about over the weekend, and again, this count has possibilities as well. Rather than primary wave 1 completing right here, and we have these 5 intermediate waves higher, 1, 2, 3, 4, 5. My alternative count, I've marked this peak as primary wave 3 rather than completing primary wave 1. It is a powerful move we've had up. This is our first wave. We're going to get a powerful 5-leg push higher. But if my alternative count is correct, still go higher, but not as high. This count shows that we're not finishing primary wave 1 up here, but it finished over here, and we had that big record-breaking rally. I believe the second best day in history for the S&P. Rallied up over 9% in one day. That's primary wave 1. We have primary wave 2. And then we have these 5 intermediate waves that make up primary wave 3. And we're about to get the primary wave 4, primary wave 5, and then we'll top at much lower levels. The trend line that I talked about in the weekly time frame, rather than trying to make it all the way up to that monthly trend line, going all the way back to the beginning of the bull market. Got that in great length of detail. If you want to see those charts, watch my weekend video. The last video, link at the end of this one with my Bitcoin video. This count says, hey, either we're peaking right here Thursday or we go a little bit higher, but we're going to pull back. Or B for primary wave 4, and then we'll get primary wave 5, and then complete the cycle top. Bull run will end. Head and shoulders won't play out. This is a possibility. Because we've had such a powerful move higher, this is still very possible. We've rallied up 30%. Terminate the bull market sooner rather than later. See the long-term chart from 1929 with these counts. Again, watch my video from the weekend. Link it at the end of this one. Remember, NASDAQ's stalling at this trend line right here. We may go a little higher into the trend line again and still end up going a little higher, but we're stalling here so far at this trend line, although you can still flirt with it, end up going a little higher. This is my longer term bullish count for the NASDAQ, by the way. We're completing or about to complete primary wave 1, and we get 5 more primary waves. This is the extended wave of 5 scenario I'm talking about for the S&P. The daily counts in just a second on NASDAQ, but we've got this little tiny diversion. So again, that may be it for the NASDAQ. Maybe NASDAQ and S&P diverge at the top here. Could be. They both had a new high there on last Thursday. S&P doesn't have this divergence in the most recent price action. NASDAQ already does. So it's possible they diverge, but NASDAQ could also be helped by NVIDIA if it does try to reach my trend line. Goes back below the lower band we did over here, popped up to it, slightly above it, closing back below it again. We'll be watching this divergence closely. The divergence on the MACD, again, it may not be done yet. Now, again, here's the count on the NASDAQ suggesting that we're about to finish, just have finished, primary wave 1, 5 intermediate waves here, make up that first wave, or are about to make up that first wave. Pull back and get a right shoulder and get primary wave 2. This rising wedge, by the way, is this completing here Thursday or at a little bit higher? This count suggests going to go much, much higher after we get this pullback. Wave 2, completing primary wave 1 right now. Our alternative count is just like the S&P 500. Rather than primary wave 1 up here, it was back over here with this record rally of like over 12%. NASDAQ, we pull back for wave 2. We've had a NASDAQ rally about 38, NASDAQ 100, about 38%, I believe. And after 2, we've got these 5 intermediate waves right here to complete primary wave 3. We're about to get primary wave 4 for a pullback. This is done, or if it's already done, and then we'll push up and we'll get one more push higher, primary wave 5, and complete the cycle top. We've got 4 over here, and then we get 5 up here. The inverse head and shoulders doesn't play out, but it completes a top at much lower levels. These are the 2 counts that I'm looking at that I think are most likely. Well, I think we'll get a pullback. I do not think we're going to go back and take out the April low right now. If this count right here ends up playing out, we top sooner rather than later, and eventually we will go back and take out that April low. Elliot wave of speculation, showing you the different possibilities with a risk of a top sooner rather than later. Now I'm looking at a pullback for both of my Elliott wave counts.